Hello everyone, Chapter 7, it's on accounting information systems. The good news is I think this chapter is the easiest chapter in the book, and I'm also not going to test as heavily on this chapter. And so I think this chapter will be a little bit slower for this week, which might hopefully will allow you time to complete your projects. So let's go ahead and just get into this quickly here. Fundamental of the system principles. It basically collects and processes data from transactions and events, and then we obviously organize them in reports, and we communicate those reports to various decision makers. And so there's a couple components to this. It's got to have the control function, the relevance. It's got to be able to supply this material that is relevant. It's got to be flexible, compatible, and it has to be cost-benefit principle. The cost-benefit principle I find a little bit interesting because the regulatory market actually does not care about this issue. So sometimes you will have to do certain things that will cost you more than the benefits you derive because of the regulatory market. But let's get into some specifics here. No surprise here. We're moving into the digital age. We have been for some times, and so it has changed accounting significantly, and we're creating more now from electronic files versus, and we're moving into a paperless systems. And whereas before we had to deal with source documents, now these are being inputted directly electronically by keyboards and scanners and barcode readers and so forth. And so it has simplified accounting quite a bit here and has speeded things up. Again, going into the various systems, we have information processing, the computer, various storage systems from hard drives, tape, CDs, as well as the cloud storage itself now. And then we have various output devices. Now, again, this is nothing I don't think anyone's going to find hard to understand here. There are a variety of special journals in accounting. For instance, we might have one journal just for the sales department, the sales journal. We might have one just specifically dealing with cash receipts, if this is a big component of your business. We might have a purchasing department that just monitors their purchases, and we'll be doing everything in that ledger, as well as maybe a cash disbursement journal to verify how they're handling their disbursements, and then of course the general journal. There are some subsidiary ledgers, are just a listing of individual accounts with common characteristics. Customers due account, amounts owed to creditors, accounts receivable, accounts payable, and these will be the subsidiary ledger, the receivable ledger or the payable ledgers. Again, I think this will be fairly straightforward. Each customer has one that fits into the accounts receivable. No surprise there. I'm not going to go into a lot of detail on following this. I think this is rather straightforward. And you can just follow each individual's account, whether how they pay or how they use, and it's just tracked in the accounts receivable ledger. You have to prove the ledgers. A schedule of accounts receivables listed as an example for each account, and then you must total these. And the accounts of this should equal the accounts in the ledger receivable subsidiary ledger. No surprise here, since we always act in balance. Again, we might track sales taxes as another example. Oftentimes the governments use businesses to collect various taxes, and sales taxes, for instance, when you go to the store, is very, very common. Sales return and allowances. Again, if the company just has a few sales returns and allowances, they're just going to record it in the general journal. But if this is a normal course of business, you might have someone that's just handling that process as a sub-department, and they'll track that in a special journal and so forth. Again, this just follows the debit and credit and how they have to balance out. You're getting cash from customers, cash from sales, cash from other sources, so you're going to track that in the cash journal as an example here. we're getting into footing, cross-footing, and posting. I might have just a question or two on this, so you might want to circle this slide on here. And again, you notice there's a single balance and then the double balance here. This is a subtotal. This is the final total, obviously with the double underneath that. And again, I'm just not going to go through every one of these. I think, again, you have to prove that these are in balance, that the accounts payable is going to match the accounts payable subsidiary ledger. Should be no surprise there. And there's this documentation to show that process. General journal transactions. Okay, we've been working with the general journal, and this is where we've been posting our entries, and then you have to do your adjusting entries and your closing entries, your purchase returns and allowances and sales return. I don't think this should be confusing at this point in time. You should be getting used to this process, and I think the project that we're doing should help cement that in your mind, that process. Computer technology, yes, there's obviously a lot of different software vendors that are providing various programs. We in fact have a class here that teaches the QuickBooks, which is one of the most popular for small businesses. You can get into very, very expensive systems that are integrated to inventory control, sales control, and so forth, that go up to the millions of dollars. But we do have QuickBooks and Peachtree are some of the most common for smaller businesses, and like I said, we do have a class that does teach this. Online processing centers, batch processing usually processes a period like in a certain point of time, like maybe 2 hours at the early morning hours maybe, whereas there's also just continuing process. We're sort of moving into the continuing process because of computer technology. Batch processing is not becoming, is sort of waning out. Computer networks, I'm not going to go into this. Yes, we have computer networks. There are servers and workstations for different people to input the data. Enterprise resource planning, big market. This integrates the whole company's operation, obviously very accounting related, because we do track and manage this for management's reports. And again, you'll have Oracle, which is a very big company. The CEO of Oracle is just retiring now. But here are some major companies that do supply this market. It's a huge market, as demonstrated here. It's a $30 billion market. Cloud computing, again, this is going into the storage device where everything's stored in the internet and so forth. That's it. So like I said, it's not going to be a very heavy chapter. Let me just get into one ratio here. Sometimes we do, it's called segment return. And segment means a specialized maybe division or component within the business, and you're just measuring its return against assets. And this is how they'll measure different components of a company, and this will help determine whether maybe they should sell that business or that venture and so forth. So yeah, they will separate it out by operating. It could be by industry, geographic, and so forth. And so there will be specialized reporting. And you can just simply do segment operating income over its average assets to determine the profitability of that, and is it really fitting management's goals and so forth. So an example here they have is Callaway Golf operates two business segments, golf clubs and golf balls. So they'll want to compare those two, and that'll help determine where they should put maybe future efforts into. That's all that is to this chapter. I hope it wasn't very hard, and we'll get into chapter 8, and after chapter 8 there will be a test. Thank you.